Good morning, it's Harvey Jackson. Just going to cover a couple topics here that I don't always discuss. The Canada Consumer Price Index, what I see in there. It was released, for the month of November, and wheat and canola ending stocks. We'll just get into this here. So all items, and I'll just maybe circle some areas on the chart here. They're saying 2.2%. So what that's saying is, in the month of November, the consumer prices only went up by 2.2%. So that's similar to the inflation rate, or it's a component of the inflation rate. But you can see that if you drew a line in here, you'd see who's above, and you got Nova Scotia, New Brunswick, Quebec, Manitoba leading the pack at 3.3, and Yukon at 2.9. And I'm probably going to highlight just a couple of the components that are in here. And I switched it up a little bit. So I put the basket. So this is year on year. So November to November price change for the year. And you can see that, the food prices increased close to 17%, 16.91% just on all food included. And you can break it down into different classes of food, the meats versus whatever, they do break it all down. But just note, there's still quite a few that are above the 16.91 as well, which is pretty intriguing. But we will get another release that will give us December numbers. I think towards like January 19th, and I can have that date wrong, but something to just keep note of. It's an inflation. It's actually getting talked about in the political circles quite a bit more too. So, and the other one is shelter, and you can see here they're saying 2.3%. But you can see who's well above there again. You've got Newfoundland, Labrador, Nova Scotia, New Brunswick, Quebec, Manitoba, Saskatchewan just right at the same level. British Columbia is a little bit lower, Whitehorse, Yukon, and the territories as well. So it's which some are almost like double the percentage higher as well. Now I'm just going to cover off ending stocks, and I'm more concerned about world ending stocks and how they've shifted a little bit here as well. So the last StatsCan did put out some numbers, and the other thing I want to maybe point out, I was showing this to a client, and he said, well, they need to buy our canola. Well, if you look at China, they're the ones with the biggest ending stocks, then us, and that number that they have is by far not the number that's going to get settled on for 2024 either. But we could say that there is a decent amount of ending stocks as well. And then on the wheat side, this is what's impacting the wheat prices, is this world ending stocks, and it had a pretty substantial jump there. And if you look at Canada, we do make the top 5 in ending stocks, and that's because of this jump here. Now, I think most analysts have their numbers a little bit lower. So when you dive into canola a little bit deeper, I have crush numbers for this year and export numbers for this year, probably higher than the pace that we're going at, and the actual production, and at 21.8, which StatsCan reported. I still believe that this number is maybe slightly higher than what StatsCan is reporting as well. So you have to crush like 24, let's call it close to 24 million metric tons of product. It's going to leave us over 4 million metric tons of ending stocks. And if I only have increase in acres of 4% and a 10-year average and 90% utilization, I do tighten up ending stocks. But when I flip this and I leave these things the same, I move it up to 8% increase in acreage and a 40 bushel yield. Stocks almost remain the same. So it's just what is the yield, and what are we going to end up planting this coming year? And it still feels like there's a lean towards oilseeds versus wheat. Another thing that happened yesterday was a holiday speech, and even though his approval ratings are starting to sink, he did try to talk about the affordability crisis as well, and that's why I highlighted the CPI with us. There will be a CPI number coming out from US, I believe, today. This is the weather that's impacting travel these days. A lot of warnings. I think most of them are going to dissipate here, but you can see how this snow build over time here. So you can see they're definitely going to have a white Christmas by the look of this in most of the areas that I kind of travel, and even towards the new year, you end up with a pretty good build there. The other thing I want to note is there's probably no shipping happening in Seattle or Vancouver, as those waves of showers keep on hitting that area. They don't load grain when it's raining, and it doesn't look like you get many open windows to be able to ship anything there. Just a quick look at the markets. Canola down $1.30, $5.95, and the March contract is at 607.30. Rapeseed trading at 466, down $1. Soybean oil trading at 48.71, just slightly up 0.19 of a penny. Crude oil is the other one that we keep watching here, $56 barrel. Soybeans 10.58, just slightly up, and your wheats are up a penny to 2 pennies, and your corn is up a couple of pennies as well, and the Canadian dollar just down just a little wee bit here as well. So here's your January contract. We are approaching that low that we made, and same thing. I just don't have my slow stochastics on the March contract, but same trend, just slightly higher values, and those prices will converge, and they are oversold, and they will, if the market doesn't rebound it, they can stay oversold for some quite time as well. European canola and your soybean oil futures, and this is what's giving us the pressure downward, still looking for some support below the market here, which still would say that we could still have some downside. So we're just touching an oversold position there, or close to it at 34% oversold. Your soybean futures, they are approaching that 31% oversold, and the crude palm oil looks like we're going to try to breach that 23.6 retracement. And watching this here is putting a lot of pressure on the veg oil complex, in my opinion, is the crude oil. Canadian dollar, it did get up to those target levels to equalize the U.S. dollar deficits in brokerage accounts. Still can be doing it anytime here. U.S. dollar index could be a potential recovery here. And when you look at the pairing with Brazil, and that's putting pressure on just the affordability of the U.S. dollar there, our soybeans. And that's all I have for you today.